I am Roger Koss. I am the Audit Program Administrator for the audit area. I have been with the Illinois Department of Revenue since June 13th, 1983. I started as a revenue auditor conducting audits on sales and use tax. I then in 1999 became a revenue audit supervisor, and I served in that role until June of 2006 when I was promoted to a division manager for the sales and miscellaneous division. In 2015, I added to my responsibilities to be the division manager also for the income tax division. And then in December of 2019, I was promoted to my current position as the program administrator for the Illinois Department of Revenue. I am married. I have four sons. I am a new grandfather, and my hobbies include watching football at all levels. So today's presentation is about don't panic, what you need to know about an audit. Before I begin to talk about the audit process, I want to have a brief discussion concerning the organizational structure of our audit program area. We are currently broken into three divisions. The first division is the Sales and Miscellaneous Tax Division. That division consists of approximately 150 auditors and 25 supervisors. We have auditors located throughout Illinois, as well as in major metropolitan areas throughout the United States, such as New York, Houston, Dallas, Los Angeles, San Francisco, and a few other large metropolitan areas. The second division in the audit area is the Income Tax Field Compliance Division. The Income Tax Field Compliance Division consists of approximately 75 auditors that are again located throughout Illinois, as well as the major metropolitan areas throughout the United States. The third and last division is called the Audit Discovery and Recovery Division. The Audit Discovery and Recovery Division, the individuals are located either at the Willard Ice Building or at 555 Monroe. There is approximately 125 staff members in the Audit Discovery and Recovery Division. We are in the process of hiring additional auditors in all three divisions. We are looking to bring these new auditors on board approximately August 1st to August 15th. So we are continuing to grow, replacing individuals that have retired or replacing individuals that have taken promotions. That is a discussion of the overall process. I want to talk about the Audit Discovery and Recovery Division. As you can see on the screen, the first area that I would like to speak about is the audit planning section. The individuals in the audit planning sections, they do research utilizing social media, utilizing what is available on the internet, and they establish audit assignments. Once those audit assignments are established, they are kept in reserve until the field personnel or the in-house personnel need audits to be conducted. And the next area in the Audit Discovery and Recovery Division is the Audit Technical Support section. What the Audit Technical Support section does is they provide guidance to our auditors. They also review legislation. They provide assistance to the litigation section when a case is in litigation. They also do provide assistance to many times we receive inquiries from the legislative office or from taxpayers in general, and they do provide assistance or knowledge or instruction to those situations also. The next section in the Audit Discovery and Recovery Division is the Audit Review and Perfection sections. Basically, these sections review and process the completed audits. We do have a two-tier review process. The initial review occurs by the supervisor of the auditor that conducted the audit. Once they have done their initial review and the audit process is completely over, those audits are then sent to the audit review section. The audit review section will randomly select specific audits for a second line review. And then upon the completion of that review, it is then moved to the perfection section, who then will input the information into our integrated tax system. Another part of our audit discovery and recovery division is the audit discovery sections. These individuals conduct desk audits. On the income tax side, they spend a large amount of their time conducting audits on non-filers. They also conduct audits on personal services income or reasonable compensation. On the sales tax side, they will conduct audits on transactions such as aircraft purchases, referrals from other states, watercraft purchases, as well as conduct some audits covering 2 to 3 years. The next section in the audit discovery and recovery division is the computer support section. These people that work in this section, they assist our auditors concerning any hardware or software issues, and they also are involved in service requests for our integrated tax system to make revisions or improvements to our system. The next area is the clerical support section. They handle all incoming and outgoing correspondence. They also work very closely with the federal state exchange unit. And as stated, the last area in the audit discovery and recovery division is the federal state exchange unit. Basically, they perform examinations based upon information that we receive from the Internal Revenue Service. We are also going to expand the federal state exchange unit by hiring an additional 25 revenue tax specialists. That hiring will take place in September or October of this year. Next slide, please. Audits are established from various sources. When we are conducting audits on taxpayers and we notice some information during the course of those audits, we may refer other taxpayers for audits. That information will be sent to the audit planning section, who will then do the research, and if needed or if enough information is available, they will establish another audit assignment on the other taxpayer. We also receive information from third parties such as other state governmental units, and we then will do the research and we will establish audits based upon information that we have received from these third parties. We also conduct audits concerning specific issues or specific types of industries. For example, we may be conducting audits on cash type businesses such as bars or restaurants based upon information that we receive from the 1099-K file, which are required to be filed with the state of Illinois on an annual basis. And of course, we do have random selection. We will randomly have the computer select audits based upon taxpayers, and that is exactly how it is stated. It is a true random selection done by a computer on a taxpayer, either for sales tax or income tax. Next slide, please. The audits conducted by the field compliance personnel usually cover a specific period of time. For the sales tax side, for a registered taxpayer, that's usually a 3-year audit period. For an unregistered taxpayer, that is a 6-year audit period. On the income tax side, we normally conduct a 2 to 3 year period based upon the filings of the taxpayer, either the fiscal year filing or the calendar year filing. In addition, that, if the taxpayer is not registered or is a non-filer, those audit periods can be extended to cover the non-filed periods. The audits that are conducted by the discovery personnel usually cover specific periods of time or specific transactions. For example, if it's based upon an aircraft purchase, there will be an audit conducted strictly on the purchase of that aircraft or watercraft or motor vehicle. Next slide, please. So, what is the timeline of the audit process? Well, once the audit planning section has done their research and they've established the audit liability, once an auditor needs an audit assigned to them, the supervisor will reach out to the audit planning section. They will have the specific type of audit that that is requested by the auditor. We have level 1, level 2, level 3 auditors, and so therefore the more complex audits are assigned to a revenue auditor 3, and then other audits are assigned to revenue auditor 2s, and then smaller audits are assigned to revenue auditor 1s. Once the audit is assigned to the auditor, they will then have an initiation letter sent to the taxpayer. The letter is sent both via the mail as well as through the MyTax portal. Basically, in this letter, it tells the taxpayer that they have been selected for audit. It will tell them what period of time is being audited, and also to please contact the auditor that is listed on the letter. If the taxpayer does not contact the auditor within 7 to 15 days, the auditor will reach out to the taxpayer using the best information that we have available to contact the taxpayer. Next slide, please. Once the contact has been made with the taxpayer, the auditor will hold an opening conference with the taxpayer. They will go over a line of questions to ask the taxpayers. Many times they will send a questionnaire to the taxpayer before holding the opening conference. They will, ask about their locations. They will talk about their business activity. They will explain to the taxpayer what areas that will be covered in the audit. For example, if it is strictly a manufacturing company, which we don't do that many audits on anymore, it may strictly be a use tax audit. If it is on a retailer, it would both be a retail tax audit as well as potentially a use tax audit. The discussion will also entail of how will the audit be conducted. Most of our audits are now conducted by exchanging information through the virtual audit room, which is a secure SharePoint environment where the auditor will request the information from the taxpayer. The taxpayer will provide that information through the virtual audit room or through their MyTax portal. If the taxpayer would like to have the audit conducted in person or does not want to utilize the virtual audit room, the audit will be conducted at either the taxpayer's location or the location of the power of attorney that is appointed by the taxpayer. There is also times that the auditor and the taxpayer will meet. The auditor will take the books and records from the taxpayer and conduct the audit either at the remote location or in a office or facility that the auditor reports to. During the course of this conversation, the auditor will determine the auditor will determine what books and records are needed, and they will issue a formal information document request with a deadline for the taxpayer to provide the requested information. That form is called the EDA 70, the information document request, and there is a deadline. Next slide, please. If the taxpayer does not provide the requested information within the time frame based upon the first information document request, a second information document request will be issued to the taxpayer with a deadline. The deadlines are usually 30 days on each of the information document requests, but they can be shorter or longer as needed. If the taxpayer does not provide the information requested on the information document request upon 2 requests, the auditor will issue a formal demand for the books and records with a deadline of 30 days to provide that information. Once the information is provided by the taxpayer, the auditor will begin to review the books and records that have been provided by the taxpayer. Next slide, please. If the books and records are not provided, the taxpayer is subject to a books and records penalty. This books and records penalty is only available under the Sales and Miscellaneous Tax Act. It is not applicable to the income tax audits that are conducted by our auditors. If additional information is needed during the audit process, the auditor will issue an additional information document request with the established deadlines. So the information document request will occur at the beginning of the audit and also possibly during the course of the audit based upon a need of information once the auditor gets into the middle of the audit process. Once the initial audit work is completed, the taxpayer will be given the preliminary audit results, and they will have the opportunity to provide any documentation to eliminate or to justify or to deal with the exceptions that were found in the audit. Next slide, please. Once the preliminary results are provided to the taxpayer and the taxpayer provides documentation to support the elimination of the deductions, this information will be reviewed and it will be determined if this information has met the criteria to eliminate the exceptions. Once this documentation has been reviewed, then the final audit working papers will be provided to the taxpayer. If you are a specific type of a taxpayer, such as a cash type business, a 1099-K type business, or we just recently began to expand the fast track resolution program to some specific issues for income tax audits, the taxpayer will be provided with information about the fast track resolution program. The taxpayer then has 20 days to request a fast track resolution conference. And this slide says sales tax only but it has been expanded to include some specific income tax audits. Next slide, please. If the taxpayer forgoes the fast track resolution program, or if there is not a resolution at the fast track resolution, the taxpayers will have the opportunity to petition the Informal Conference Board if there is an audit liability or a claim denial, unless the statute of limitations is set to expire within 60 days. What will happen at this point? The taxpayer will receive a proposed notice of tax liability or a proposed claim denial, and they'll have 60 days to petition the ICB. The auditor will explain the ICB process, and later on in this presentation today, there will be a more thorough discussion concerning the ICB process. Next slide, please. The taxpayer does have the ability to waive the fast track resolution or the Informal Conference Board process and agree to the audit liability. If they do this, the final audit report will be issued. The taxpayer has 30 days to agree and pay the liability. If they do not agree to and pay the liability within those 30 days, the penalty will increase by 15%. The initial penalty is 15%, and it will be increased if it is not paid and agreed to within 30 days. Interest will continue to accrue until the liability has been paid. There is one slight change to this. There was just some recently passed legislation for sales tax, which changes it. Prior to this legislation, the taxpayer had to sign the amended return as to show that they agreed with the audit liability. However, now payment equals agreement for sales tax, just like payment equals agreement to an income tax liability. If the taxpayer is unable to pay the entire liability, they can enter into a payment agreement with the agency. They will then start dealing with the collections division, and there are specific requirements that are needed that will be explained by the collections division if the taxpayer qualifies for a payment plan. Next slide, please. If the taxpayer does, they can also waive the fast track resolution in the informal conference, and they can disagree with the final audit results, and they still retain their formal protest rights. Once, if this is the case, once the audit is processed, the taxpayer will either receive a notice of tax liability, commonly known as a NTL, for sales and miscellaneous types audits, or they will receive a notice of deficiency for income tax audits. The taxpayer then has 60 days from the date of the NTL or the notice of deficiency to request an administrative hearing if the liability is less than $15,000, or they can petition the independent tax tribunal if the liability is greater than $15,000, or if the type of tax is not eligible for the administrative hearing. Next slide, please. The taxpayer also has the ability to bypass the administrative or the independent tax tribunal by paying the tax liability under formal protest and going straight to the circuit court. There is a special form called an RR 374, which must be completed, and the payment must occur before they can go straight to the circuit court to protest the additional audit liability. Next slide, please. What is the purpose of sales and miscellaneous or use tax audits? We want to verify that the proper tax has been collected and remitted on taxable transactions. Or if the transactions are deemed to be not taxable, we want to ensure that the taxpayer has the proper documentation to support the non-taxable transactions. We also want to verify that the taxpayer has paid the appropriate use tax on the purchases of any tangible personal property that is used or consumed in the operation of a business. And an example of that is, if a taxpayer is a retailer and they purchase new computer systems that they use in the operation of their business, they either have the opportunity to pay tax to their vendor or their supplier at the time of the purchase. If they have not paid the tax to their vendor or their supplier at the time of the purchase, there is a line on the ST1 return that the taxpayer has the ability to pay the appropriate use tax directly to the Illinois Department of Revenue. Next slide, please. Examples of documentation to support non-taxable transactions. If you are claiming a sales for resale, the taxpayer must have a properly completed resale certificate on file from the purchaser. There are 5 parts of this resale certificate that must be completed. If it's a sales to an exempt organization, you need to have a copy of the organization's tax exemption letter from the Illinois Department of Revenue, and also the invoice must be paid by funds from the organization. Sales and interstate commerce, if you are a retailer and you make a sale to an individual that is located, say, in the state of Indiana, there needs to be some sort of documentation that shows that the tangible personal property was actually shipped to or delivered outside the borders of the state of Illinois. Therefore, it could be UPS receipts, it could be common carrier, or if you delivered in your own truck, there would have to be some type of a log that shows that your truck did travel across or outside the borders of the state of Illinois. Next slide, please. What is the purpose of income tax audits? We want to verify that the modifications that are on the various income tax returns are properly reported and supported by documentation. We want to verify that the claims that have been claimed, or the credits that have been claimed on the various income tax returns, are supported by documentation and that they have not expired. There is usually a period of time where the claims for credit, or the credits claimed, do expire. Usually it's a 5-year term. We also want to verify that the receipts are either properly apportioned if you're a multi-state business, or they're properly allocated. And we also want to verify that income is properly reported by the pass-through entities. For example, a subchapter S corporation, there is a replacement tax that is paid by the subchapter S corporation. However, the income flows to the shareholders of the subchapter S corporation, and we also want to verify that that individual has filed their personal income tax return and claimed the income that flows through from the subchapter S to the shareholder themselves. Next slide, please.
Thank you, Roger. At this time, you should see a Slido poll on the right side that should come up. So if you would kindly respond, we'd appreciate it. And Roger, while we wait just a few more minutes, there was a couple of questions that came in. One of them is there a best practice to reconciling gross sales on the ST1 to filed corporate federal tax returns?
The very important part to understand about the ST1 is you should be reporting all of your receipts on the ST1 return and then claiming the deductions on the back side of the return, or the part A of the return. Many taxpayers eliminate their deductions and they only show the taxable sales on the ST1 return. But the best and the really required method is that all receipts are supposed to be reported on line 1, and that would be part of our audit process. We are going to reconcile the receipts that are reported on the line 1 of the sales tax return to the books and records kept by the taxpayer to the federal income tax return. So the most important thing is to ensure that all receipts are on the sales tax return, or the ST1 return, and then the proper deduction taken on the Part A, or the backside of the ST1 return.
Thank you, Roger. And Roger, one more question for you. How many years of data is a business required to store for any future audits?
Again, like I stated, if you are a non-registered or a non-filing taxpayer, our statute of limitations is 6 years. So you should at least keep 6 to 7 years. If you are a registered taxpayer, our audits usually cover the previous 3 years. So I would, for best practices, I would save at least 6 to 7 years of books and records. So in case you are not registered for sales tax, or if you have not filed your income tax returns. Really, quite honestly, there is no statute of limitations for a non-filed income tax return. And there is a statute of limitation that goes all the way back to July of 1981 for non-filed sales tax returns. But we do, at the current time, we are not going all the way back to 1981. But technically, that is the law which was brought about due to the first amnesty, was a non-filed return can actually be audited back to July 1981, but that is not happening on a regular basis.
Thank you, Roger. And is the increase in identity verifications for income taxpayers coming through the audit office?
We are very careful to make sure that we keep the confidentiality of our taxpayers from the fact that we do not use the entire Social Security number. But if there's identity theft or something, that is probably handled by the Attorney General's office.
Very good. Thank you, Roger. Okay, so at this time, we're going to pass things off to Dan Hall. He's our Informal Conference Board Administrator, and he's going to discuss updates from the ICB. Dan, take it away.
Thanks, Terry. My name's Dan Hall. I will have to say I haven't been here quite as long as Roger. I didn't start until October of '85 versus his June of '83. So haven't been around quite as long. I did start an audit just like Roger. I've been the ICB administrator since November of 19, and prior to that time, I'd spent almost the last 16 years as the audit program administrator. And then all my other time at the department has also been within audit. Next slide, please, Terry. So now that you've had an audit, there is one thing that Roger mentioned is ICB, the Informal Conference Board. Our role is to review proposed audit adjustments prior to the issuance of a protestable notice and to attempt to resolve the issues presented in the audit at the earliest point. One thing I just want to mention about this is not every audit qualifies for ICB. You have to receive as Roger noted, an actual proposed notice of liability, claim denial, or liability and claim denial. And as Roger also mentioned now, the change with sales tax, but if you pay the audit or sign the audit returns before ICB, you do not receive ICB rights because at that point you have agreed to the audit, and at that point we have no authority to review the notices. In ICB, there's really three things that might happen. The audit could be upheld and no change could be made. There could be partial changes based on the documentation supported and review of the issue and the facts behind it. And also we can reverse the audit assessment completely. Just to give you an idea, this is the inventory at the end of May. We held assessments over $134 million and claims of almost $100 million in our 176 cases. As you see, we're kind of balanced between income tax and sales tax at this time. Next slide, please. This is a breakdown of our current staffing. It has changed really recently. We currently have 5 income tax and 3 sales tax conferees. To give you an idea, both Chad Estes and Lori Evans started June 1st, so those are 2 brand new additions. And Jason Masunis, who is on our sales tax staff, started June 16th. Our contract conferees are conferees who have actually been around for a long time and have retired. They're currently on contract, and those contracts will expire at the end of December. So we're transitioning in the new staff using some expertise of prior audit, prior people, conferees to share and pull that together. Just so everyone is aware, if you didn't know, but Chad, Lori, and Jason all came directly from audit. Some were management in audit, and Jason was an auditor. Next slide, please. Through COVID, and we really see this being a great way to correspond, we have set up, excuse me, a ICB email address. And I'm sorry, I thought I'd turn my video on. This ICB email address is posted on our ICB forms, our documents about ICB, and it's there as a methodology for filing. We use this address for submitted ICB-1s. You can file via email. We do not require a paper submission of the ICB-1. If you do submit it via email, we do not need a paper copy to be submitted. I know we still get a number of those. They may get certified. They're looking for some verification of receipt, but it is not necessarily required. If you do file via email, it is not normal process to actually respond to the email. We treat the email the same as a paper filing. And in those filings, the first response you get from ICB after the filing is the letter that is either an acceptance or rejection of your application to ICB. The next point I have here is if you would like verification of receipt of the email filing, please make note of that in the in your filing of the ICB-1 materials with your email. If you do put in a request to verify a receipt, we will verify that we have received it and we're able to open the ICB-1 submission, but we will not tell you if it's been accepted or denied until it's been processed. So that's what there is. The next thing that you can file through that is an ICB-2. That ICB-2 is related to settlement offers. Any submission of additional information, if you need to attach it with your original filing, please review the ICB-1 at the bottom of the second page. It identifies things that you need to be sure that you attach or include with your ICB filing. If there is additional information that's requested later, or you have additional information you want to submit after your initial filing with ICB, but prior to a conference or an ICB conferee contacting you, you can also submit that there. If you ever have a question regarding ICB or any of its processes, you can send emails through the Rev ICB email. Those emails all go to myself and my assistant, so any email sent to Rev ICB also comes to myself. Next slide, please. What's happening? We had, due to a lot of retirements, turnover, we had gotten a lot of older dockets out there, and we really have focused on completing older dockets. In fact, in the last 2 years, we have reduced our average age of cases by over 200 days. So that's a pretty big change from previously. We're in the process of currently trying to fill one remaining sales tax conferee vacancy. It's in the process currently with anticipation of posting a sales tax conferee for the Willard Ice Building here in Springfield in sometime in August. Conferences. What happens? Where are they? We will do in-person, WebEx, phone conferences. We have situations where taxpayers have wanted to set up the conference themselves, and we use Zoom in those cases. We do them in person, whether it's at 555 West Monroe, our new downtown Chicago facility we moved in last year, the Des Plaines Regional Facility, or the Willard Ice Building here in Springfield. Next slide, please. Additional things of what's happening. We really haven't seen changes in the number or percentage of submissions to ICB. We range somewhere in the 3 to 4% range of the audits that get completed are done. issues, with law changes, we have seen different issues come through. Probably the most common things we've been seeing in sales tax lately has been 1099K type audits, Wayfair audits, watercraft cases that are done by the Discovery section in Springfield. For income tax, we see cases related to apportionment, unitary groups, um, TSI, reasonable compensation, residency, and some Schedule C activities done by audit. The submissions really depend on the number of auditors that are out there. And as Rogers mentioned, they're getting ready to hire additional auditors. As more auditors are out there, there's chance for more audits to be completed, which also means potential for more cases. ICB, we do receive requests to include periods outside audit, the audit periods before ICB. We do not have authority to address anything other than the audit in ICB. So we leave that in that level. We do address this or consider it, and since the board itself, which is made up of the audit program administrator, the general counsel, and the chairman of a board of appeals, who would be involved in a number of any type of other settlements for other periods, we will work between the board and the board members and the taxpayer to attempt to see if there is a way to address the periods in ICB and other periods. But that is not handled directly through ICB. It is more of a board, the actual board members working with the taxpayers at that time. Next slide, please. There are limits to what ICB will address. It has to be an issue included in the audit and raised in the ICB-1. If you are wanting to discuss something that was not an audit issue, that is not a forum that ICB addresses. And so if there are maybe, let's say there's 4 or 5 issues in the audit, but you only disagree with 1 or 2 of them, you only raise those 2 issues in the ICB-1, and as a result of that, those are the only issues we will focus on. We will not look at any other issues. We do not do a re-audit, and we do not raise new issues in ICB. Information requests. As Roger mentioned, try and follow and address all the information requests through the audit process. But if there are information requests that were not answered during the audit that are related to the issues that are raised in the ICB-1, we will look at requesting those documents through ICB. We may also identify items that we believe are necessary to address the issue specifically or address things that were presented in the ICB submission that we will request as well during the ICB process. Settlements, as I mentioned earlier, ICB-2 is used to present a settlement. I do want to go back. When you do submit an ICB-1, please ensure that you address the issues you have with the audit. Sometimes we don't get step 4 completed. Sometimes we just get, well, I disagree with the audit. Those really aren't explanations. You need to identify the issue and the reason you disagree with the issue and your basis for that disagreement. That is what we look for and to move the process. So, settlements. You can submit an ICB-2 settlement proposal with your ICB submission. You can also do so during the ICB process. Maybe you're working along with the conferee and you've had discussions back and forth, and at some point you think, you know what, I might want to go ahead and submit an ICB-2. You can do that. You can also do so after the conclusion of the ICB conference. If during the conference you hear or get a feeling about certain things, you may say, you know what, I'm going to offer a settlement. We can counter, we will discuss, counter, go back and forth as necessary to maybe see if we can reach resolution. The ICB conferee may also propose a settlement opportunity during the conference. If you receive a request from the conferee, well, you normally look at to say, are you interested in a potential settlement, and ask you to submit the ICB to. Next slide, please. How to keep things moving. One is be responsive during the audit, ensure IDRs are responded to timely, completely during the audit. Submit all your necessary information, support materials with your ICB submission for your issues being challenged, and be responsive to conferee questions or requests for information in a timely manner. Next slide, please. As a result of some of as you've seen, we've been adding conferees, or we have contract conferees right now. Because of those changes, it had slowed down our ability to assign conferences. That's starting to get back a little bit with the addition of the 3 conferees in June. And hopefully as we add the next conferee in the next couple months, we will be able to get back to moving things as normal. That staffing changes have also required juggling of inventories. And as many of you probably have experienced at your firms as well, or as many of us within state government know, hiring has not been the easiest thing to address. We have some positions I've been trying to fill for 2 to 3 years. So it is not something that has been the easiest process, but we are making headway. I did also want to note that the average age of an ICB case is now being reduced to less than 1 year. That was a goal set for the agency when I took over at ICB. So it is nice now that we are under a year. There are still some old cases out there, but we're trying to keep working on those. But that is all I have for today. Next slide.
Okay, Dan, we'll leave that poll open for just a few minutes. And while that's open, a couple questions for you. One was, how often does the ICB reverse audit results completely?
I wouldn't say it's significant, but there are times where we have done it. It depends on the issue and what is there. Sometimes it may be that the auditor misinterpreted the issue, and based on the analysis of that, the assessment related to that issue shouldn't have been made in the initial status, or the taxpayer's documentation that they have presented during the ICB process identifies and addresses the issue such that it shouldn't be assessed. So we do have that happen. And why I say how often it might happen 100%, if you only challenge one issue and we agree that that issue is incorrect, that's going to be the case. If you raise 3 issues, we may agree on one that it shouldn't be assessed, but maybe the other 2, there may only be a no change or a partial change related to those issues. So I don't really have a percentage, but it really depends on the situation.
Very good. And then this one, I'll just throw this out there and see if anybody wants to field it. When trying to help non-filing income tax clients, what is the best way to find their state income / withholding if they do not have copies of W-2s? Federal wage transcripts give us the W-2 income, but not the state income or withholding.
I don't know if I have a good answer for that. I don't know if that's something that the department has the ability to present back to the taxpayer if they have it, or what the best way is. I know sometimes it may be, well, go back to your employer and the employer and see if they can get it. I understand that may not always be possible, but at least that is one thing, is you could go back to your client's employer, or I'm not sure if there's anything that the department offers through taxpayer service or
Yep.
our processing areas.
Mary,
The only other
okay.
suggestion I was making is, if the employee has kept their last paycheck stub, that information may be on the last paycheck stub.
And Mary, we'll circle back with our taxpayer services as well on that particular question and get your response if they have any additional information to provide. Okay, we're going to close the poll in just a few minutes. One more question that came in. If new non-filing client hasn't filed for 10 years and IRS says to just go back 6 years, back to 2017 and go forward, will IDOR follow that also or require us to go back all 10 years?
I'll answer that, Dan. We will go back as long as we have. Usually we go back 6 years, but if we have verifiable evidence that can be documented and can be supported, we may go back past that 6 years. But if that happens, it has to be approved by myself before we go beyond that time frame.
All right. With that, we have concluded today's webinar. Thank you very much for attending. If you have any questions as a follow-up, I encourage you to contact Aaron Horath, and that's Aaron, AARON .Horath, and that's HORATH @illinois.gov. And he'd be happy to field any questions or concerns or difficulties that you may have had with this particular webinar. Again, appreciate you, and we'll see you next time. Thanks.